The Australian labour market has consistently been one of the standout performers in the economy through this cycle. Records have tumbled as employment has grown strongly and the unemployment rate has hovered around its lowest level in almost 5 decades for several months. This means that more Australians can get a job and gain the additional hours of work that they seek. This week, we received the latest labour market update for March. It was another strong result, showing that employment grew by 53,000 people in the month. This follows a volatile period over recent months where employment was impacted by larger than usual seasonal factors. The result demonstrates that the labour market currently remains very tight. The unemployment rate held at 3.5%, near an almost 50-year low, while the participation rate was also unchanged, near a record high. However, while the labour market remains tight, employers have gradually been finding it easier to fill positions. There are several drivers of this. One of the key ones has been the extremely rapid return of migration, and we can see evidence of this in the labour force data. The working age population is estimated to have grown by over 480,000 people over the past 12 months. This is the fastest growth in a 12-month period in history. So far, labour demand has been strong enough to absorb this rapid increase in labour supply, meaning that the unemployment rate hasn't risen much. However, with a weakening economy and tight monetary policy, labour demand is expected to slow through the rest of this year, and supply is likely to outpace demand. This will likely place upward pressure on the unemployment rate and downward pressure on wages growth. So, what does the latest jobs market reading imply for the RBA? Prior to pausing at the April board meeting, the RBA outlined 4 key data releases they were watching. These were the labour market, business conditions and confidence, consumer spending, and of course, inflation. Ahead of the May meeting, these data releases will be in focus again. But importantly, the RBA will have the benefit of seeing the full March quarter inflation report, not just the monthly indicator. Earlier this week, we received an update on business conditions and confidence. This showed that conditions remained robust, but that a general slowdown is underway as higher rates bite. Today's strong employment report suggests that the labour market is still tight and supports the case for a hike in May. But the decision remains a close call. The March quarter inflation report, due later this month, remains key to determining whether the RBA hikes rates again in May.